Look, I need you to pay very close attention to what I'm about to show you, because what's happening in the silver market right now is something most people won't see coming until it's too late. And by then, the opportunity will be gone. You know how everyone's been watching gold hit record highs? While the financial media has been obsessing over gold breaking through $2,700, then $2,800, something far more explosive has been building in silver. And the smart money? They've been positioning themselves for months. Let me paint you a picture of what's really going on here. Right now, silver is trading around $31 per ounce. Sounds reasonable, right? But here's what they're not telling you on CNBC. The gold to silver ratio, which historically averages around 60 to 1, is currently sitting at nearly 85 to 1. That means silver is historically cheap compared to gold. Massively cheap. But that's just the surface. Let me take you deeper into what's actually happening in this market, because when you see the full picture, you'll understand why some of the biggest players in the world are quietly accumulating silver like their lives depend on it. First, let's talk about supply. The world produces about 830 million ounces of silver every year. Sounds like a lot, doesn't it? But here's the thing. Industrial demand alone is consuming over 550 million ounces annually. We're talking about solar panels, electric vehicles, 5G infrastructure, medical equipment, water purification systems. Silver isn't just a precious metal anymore. It's become absolutely critical to the green energy transition and the technology revolution. And that industrial demand? It's accelerating. The Solar Energy Industries Association projects that solar installations in the United States alone will triple over the next 5 years. Each solar panel requires about 20 grams of silver. Do the math on millions of new panels being installed globally, and you start to see the problem. We're talking about an additional 150 million ounces of silver demand just from solar in the next few years. But it gets more interesting. Unlike gold, which gets recycled at a rate of about 90%, silver gets consumed. When silver goes into a solar panel or an electronic circuit board, it's essentially gone from the market. The recycling rate for industrial silver is less than 30%. That means every year, hundreds of millions of ounces of silver are permanently removed from the available supply. Now, you might be thinking, okay, but can't they just mine more? And that's where this story takes a fascinating turn. Silver production has been essentially flat for the past decade. In fact, many of the world's largest silver mines are seeing declining output. The Cannington mine in Australia, once the world's largest silver producer, has seen production drop by over 40% in the last 5 years. Fresnilo's mines in Mexico are producing less silver year after year. And here's something most people don't realize. About 70% of silver production comes as a byproduct of mining other metals, primarily copper, lead, and zinc. So silver miners can't just decide to produce more silver because the price is going up. They're constrained by the economics of the primary metals they're mining. Let me tell you about what happened in 2011, because history has a way of rhyming in these markets. Silver went from $18 an ounce in August 2010 to nearly $50 an ounce by April 2011. That's a 177% gain in 8 months. And you know what triggered it? The exact same conditions we're seeing today. A supply deficit, rising industrial demand, and investors waking up to silver's role as both an industrial metal and a monetary asset. But here's what makes the current setup even more explosive than 2011. Back then, we didn't have the green energy revolution. We didn't have electric vehicles becoming mainstream. We didn't have 5G networks being built out globally. The industrial demand story for silver is exponentially stronger today than it was 13 years ago. And then, there's the investment demand side of the equation. This is where things get really interesting. The silver ETFs, the big ones like SLV and PSLV, they hold about 650 million ounces of physical silver. That's nearly 80% of annual global production just sitting in vaults, backing these investment vehicles. When investment demand surges, and it will, where's that silver going to come from? I was looking at the data from the US Mint the other day, and it's absolutely stunning. American Silver Eagle sales have been running at near record levels. In 2023, the Mint sold over 24 million Silver Eagles. That's physical silver going directly into the hands of retail investors, and it's not coming back to the market anytime soon. But let's talk about the elephant in the room. The COMEX. This is the exchange where silver futures are traded, and it's where the price of silver is essentially set. Now here's where things get controversial, but you need to understand this. The COMEX has been accused for years of price suppression through paper contracts. Banks and large institutions can sell massive amounts of silver futures contracts without actually having the physical metal to back them up. And for years, this worked. They could keep a lid on the price by flooding the market with paper silver whenever the price started to rise. But something's changing. The amount of physical silver in COMEX warehouses has been declining. We're down to about 270 million ounces in registered inventory, the silver that's actually available for delivery. That might sound like a lot, but when you consider that the open interest in silver futures represents claims on over 900 million ounces, you start to see the problem. What happens when more people start demanding physical delivery? What happens when the paper market collides with the physical reality of limited supply? We got a preview of this in 2021 during the Reddit silver squeeze. The price spiked, premiums on physical silver exploded, and dealers ran out of inventory. And that was just retail investors. Imagine what happens when institutional money starts demanding physical delivery. Let me tell you about what the central banks are doing, because this is crucial. While everyone focuses on central banks buying gold, something else has been happening quietly. Countries like India, China, and Russia have been accumulating silver. Not in the massive quantities they buy gold, but strategically. They understand that silver is both a monetary metal and a strategic industrial resource. China, in particular, has been fascinating to watch. They're the world's largest producer of solar panels, the largest market for electric vehicles, and they're building out the most extensive 5G network on the planet. All of that requires silver. And at the same time, they've been reducing their silver exports. In 2023, Chinese silver exports dropped by over 30% compared to the previous year. They're keeping their silver at home. Now, I want to take a quick moment here because this is important. If you're sitting on $100,000 or more in retirement accounts, you might want to check out the free guide I put together on how gold and silver IRAs work. It's in the description below. It covers how you can get physical precious metals into your retirement account without triggering tax penalties. Worth looking at if you're thinking about protecting your retirement savings with hard assets. All right, back to what's happening in the market right now. Because the technical setup on silver is absolutely screaming. If you look at the charts, silver has been consolidating in a range for months, building energy like a coiled spring. We've got a massive cup and handle pattern forming on the weekly chart. The 200-day moving average is providing strong support, and every time silver tests resistance around $32, we're seeing less selling pressure. You know what that tells me? The weak hands are gone. The people who were going to sell have already sold. What's left are the strong hands, the people who understand what's coming and are holding tight. And when silver breaks through that resistance, and it will, we're going to see a move that catches most people completely off guard. Let me give you some context on what a real silver bull market looks like, because I think most people have forgotten. From 2008 to 2011, silver went from $9 an ounce to $48 an ounce. That's a 433% gain. From 1971 to 1980, silver went from $1.50 to $50. That's a 3,233% gain. Now, I'm not saying we're going to see those kinds of percentage moves from current levels, but even a move to the 2011 high of $48 would represent a 55% gain from today's price. And here's the thing. The fundamentals are stronger now than they were in either of those previous bull markets. The supply deficit is larger. The industrial demand is more critical. The monetary system is more unstable. And the amount of currency that's been created since 2020? It's absolutely staggering. Think about this. The Federal Reserve's balance sheet went from $4 trillion in early 2020 to $9 trillion at its peak. That's $5 trillion of new currency created in less than 2 years. And while they've been trying to reduce it through quantitative tightening, we're still sitting at over $7 trillion. All that currency has to go somewhere. And when people lose faith in paper assets, when they start looking for real, tangible stores of value, where do you think they're going to turn? Gold and silver. But here's why silver might be the better play right now. Gold has already made its move. It's at all-time highs. Silver is still 35% below its 2011 high. There's massive catch-up potential. And because silver is a smaller market than gold, when money starts flowing in, the price moves are more dramatic. Let me tell you about the silver market's dirty little secret. The entire above-ground investment supply of silver, all the coins, all the bars, all the ETF holdings, It's worth maybe $50 billion. That's it. For context, Apple's market cap is over $3 trillion. The entire investable silver market is less than 2% of one company's valuation. When institutional money decides to allocate even a small percentage to physical silver, the impact on price is going to be enormous. And we're starting to see the early signs of this. Hedge funds have been building long positions in silver futures. The Commitment of Traders report shows that managed money, the big institutional players, have been steadily increasing their net long positions. They're positioning ahead of what they see coming. But it's not just the financial players. Industrial users are starting to panic about supply. I've been hearing stories from people in the solar industry about companies trying to lock in long-term silver supply contracts at fixed prices. They're worried about availability. They're worried about price spikes disrupting their business models. When industrial users start competing with investors for limited supply, that's when prices really take off. Now, let's talk about what could trigger the spike. Because silver doesn't move in a vacuum, it responds to catalysts. And there are several potential catalysts on the horizon that could light the fuse. First, there's the inflation story. Despite what the government statistics say, real inflation, the inflation people feel in their daily lives, is still running hot. Food prices, energy prices, housing costs, they're all significantly higher than they were a few years ago. And when inflation is high, people look for inflation hedges. Silver has been an inflation hedge for thousands of years. Second, there's the geopolitical situation. We're living in an increasingly unstable world. Tensions between the US and China, the ongoing situation in Ukraine, instability in the Middle East, the potential for a wider conflict is real. And when geopolitical risk rises, precious metals rise. It's been that way throughout history. Third, there's the banking system. We saw what happened in March 2023 when Silicon Valley Bank collapsed. We saw the panic, the bank runs, the emergency interventions. The banking system is more fragile than most people realize. And when confidence in banks wavers, people move money into physical assets they can hold. Fourth, and this is the big one, there's the potential for a short squeeze in the paper-silver market. If enough people start demanding physical delivery of their futures contracts, if the COMEX can't deliver the physical metal, we could see a price explosion that makes the 2021 Reddit squeeze look like a minor blip. I want you to understand something about market psychology, because this is crucial. Markets don't move in straight lines. They move in waves of emotion, fear, and greed. Right now, most people aren't paying attention to silver. It's not making headlines. It's not the hot trade. But that's exactly when the smart money accumulates. By the time silver is making headlines, by the time your neighbor is talking about it, by the time financial advisors are recommending it, the big move will already be underway. The time to position yourself is before the crowd arrives. And right now, we're in that quiet period before the storm. Let me share something with you that I find fascinating. Throughout history, the gold-to-silver ratio has been a remarkably reliable indicator. When it gets extremely high, like it is now, silver tends to outperform gold in the subsequent rally. When it gets extremely low, gold tends to outperform. Right now, at 85-1, we're at the high end of the historical range. That suggests silver has significant catch-up potential. If the ratio were to revert to its historical average of 60-1, and gold stays at current levels around $2,650, silver would need to be at $44 an ounce. That's a 42% gain from current prices. And if gold continues higher, which many analysts expect, silver could go much higher than that. But here's what really gets me excited. We're not just talking about a trade here. We're talking about a fundamental shift in how people think about money and value. For the past 40 years, we've been living in a world of paper assets, stocks, bonds, digital currencies. But there's a growing recognition that physical assets, tangible assets, have a value that can't be inflated away or manipulated by central banks. Silver represents that tangible value. You can hold it in your hand. It has industrial uses that are critical to modern technology. It has a 5,000-year history as money. And it's in limited supply. You can't print more silver. You can't create it out of thin air. It has to be mined from the ground, and that takes time, capital, and energy. I've been watching the silver market for a long time, and I've seen several bull markets come and go. But the setup we have right now, the combination of supply constraints, surging industrial demand, monetary instability, and technical positioning, it's the most compelling I've seen in years. And here's the thing about silver. It's accessible. Unlike gold, where an ounce costs over $2,600, you can buy an ounce of silver for around $31. That means regular people, not just the wealthy, can participate in this move. You can start building a position with a few $100s. You can dollar cost average over time. You can accumulate physical metal that you own outright with no counterparty risk. Now, I'm not going to tell you that silver is going to go straight up. Markets never do. There will be pullbacks. There will be volatility. Silver is known for its volatility. But if you understand the bigger picture, if you understand the fundamental forces at work, those pullbacks become buying opportunities rather than reasons to panic. Think about what we're really talking about here. We're talking about a metal that's essential to the green energy transition, to the technology revolution, to the electrification of transportation. We're talking about a metal that's in structural deficit, where demand exceeds supply. We're talking about a metal that's historically undervalued relative to gold. And we're talking about a metal that serves as both an industrial commodity and a monetary asset. That dual nature of silver, that's what makes it so powerful. When industrial demand is strong, it supports the price. When investment demand kicks in, it amplifies the move. And right now, we're seeing both. Industrial demand is at record levels and growing, and investment demand is starting to wake up. The question isn't whether silver is going to spike. The question is whether you're going to be positioned when it does. Because once this move starts, once silver breaks through resistance and the momentum traders pile in, once the financial media starts covering it and retail investors start buying, the price is going to move fast. I've seen it happen before. In 2010 and 2011, silver went from $18 to $48 in 8 months. People who were positioned early made life-changing returns. People who waited until silver was at $40 and bought at the top, they learned an expensive lesson about timing. Right now, we're in the accumulation phase. The smart money is building positions. The technical setup is coiling. The fundamentals are screaming. And most people aren't paying attention. That's your opportunity. So here's your move. Start educating yourself about silver. Understand the market dynamics. Look at the supply and demand fundamentals. Study the charts. And consider building a position. Whether that's physical silver coins and bars, whether it's silver mining stocks, whether it's silver ETFs, or whether it's a combination of all three, that's up to you and your individual situation. But don't wait until silver is at $50 and everyone's talking about it. Don't wait until the move is over and you're left wondering why you didn't act. The opportunity is now. The setup is now. And the smart money is positioning now. Because when silver spikes, and it will, the move is going to be fast and dramatic. And the people who are going to profit are the ones who saw it coming and positioned themselves ahead of the crowd. That's how wealth is built in markets. Not by following the herd, but by understanding the fundamentals and acting before the obvious becomes obvious to everyone else. The silver market is sending signals right now. Clear signals. The question is whether you're paying attention. Whether you're willing to look past the noise and see what's really happening. Because what's happening in silver right now is the setup for one of the most explosive moves we're going to see in the precious metals market. And you have the opportunity to be on the right side of it.